Trade troubles spooking stocks Tuesday. The S&P 500 down for a third day in a row and at its lows of the day, falling to its lowest level in a month. So is this setting up to be a dreadful December for Wall Street? Let's go off the charts to Todd Gordon of tradinganalysis.com. Todd, what are you looking at?
Hey, Melissa, no, I don't think this is going to be a repeat of last year. I think we are in a solid technical uptrend here. This is the weekly S&P, a beautiful parallel channel here. As Carter Worth would say, I don't draw the lines, the market draws the lines. We are still well above support. I still stand by it, Melissa. I do have a 4,000 target. Again, it could be 2 to 3 years down the line. I don't know when it's going to happen, but that's when the current market at its rate of trajectory will intersect resistance at the 4,000 mark. So I think we're fine. This is the weekly. Let's go down to the daily here. We've broken above beautiful level. It's about 30.30 was resistance. Anything that was broken, we return to the scene of the crime, offer support. It's just a natural kind of check back. Anybody who's caught short will use that as a synthetic level to cover, to buy. Pullback buyers will get in, and hopefully momentum guys will as well, carrying the S&P to new highs. So I continue to be long in my portfolio stocks and options. I like it. Don't like the volatility the last couple of days, but the volume has not been excessive on the downside. Trading about 80 million, 70 million SPY shares, which is very similar to what we've seen even on up days over the last couple months. So today's volume was not excessive. We're still being led by technology. Some of the sectors that are leading are XLK, as Tony mentioned before, healthcare, and also financials. So by far right now, NASDAQ is outperforming the S&P. That XLK continues to outperform. So this is the NASDAQ 100 up here. Relative to the S&P, you can see that we're moving higher. So that means NDX, SPX is moving up, which means NDX is outperforming. Same thing. The 30-30 level in the S&P correlates to 80-30 in the NDX. So again, if we can go back, test it, I think it's a nice entry point to resume the uptrend.
All right. So, but Todd, for the S&P 500, we've got about 60 points to the downside before we make any real damage.
Absolutely, yeah. Right now, it's fine. I'm not saying we're going to get there. I do think that support continues to be right in the zone. We don't need to wait. If you're looking to buy shares, if you're looking to add, volatility's up, and again, volume is not very large, so don't wait for that exact level if you're looking to add. But I do think, from a seasonal basis, we should rally into the end of the year.
What would be some safe havens at this point in the markets? I mean, if you chose to go that route, we saw gold perk up today, for instance. Gold
perked up. I mean, this was a pretty big move down in bonds, up in rates, so no safe haven there. And again, if you look at the sector rotation, this rotation that we look at on a weekly basis, you've got technology leading, financials are coming in. I think that XLF might be a good place to hide in a increasing rate environment. So I would say look at some of the banks. That XLF is showing some good strength.
Guy?
60 S&P points gets you back down to sort of 30.25, 30.30, which is, if you go back and look, that's where we topped out at the end of July. So we had that huge move up in July, then the subsequent sell-off. So it makes sense we do a back and fill to the 30.30 level. That's why I think we're going. And quickly, what was the thing at December to remember? It made me think of a long December by Counting Crows.
December, yeah.
It's a good song.
Me too.
Average.
No, stop it, Melissa. Stop it.
Okay.
But it is a good song. And if our crack staff, by the way, is that good, the outro or the intro of the next block, they'll be playing that. Just saying that.
Really
would financials be a place to hide, in your view?
Well, it's interesting because if you look at stocks that kind of fell out of bed today, you could look at a Bank of America, you could look at Apple, and you could look at either trade war or we talked about 2's 10s is now 17 bips, has been flattening. You had a 15 basis point pullback on the 10-year. Banks have been incredibly sensitive to that. That's really what you have to watch. I look at the 10-year chart, and if you want to follow those channels that are nice from the bottom up that these guys have been talking about, that's one that may be breaking down. And if that breaks down, that's not good for equities.